Hello, this is Jordan. This video is being recorded on Friday afternoon, March 8th, 2024. Thank you so much for tuning in. Let's see, not a whole lot to talk about this week. I mean, just perhaps the biggest breakout for gold since artificially 1971. One of the biggest breakouts in the history of capital markets, but that's a whole nother video. So gold finally breaking out from its 13-year cup and handle formation. Also a strong week for silver and the miners. Just check GDX, GDXJ, 8% plus gains on the week. Silver was up 5%. So let's look at the charts. Let's get into it. Okay, so just touching on the cup and handle pattern and some history. If we use weekly closing prices, we can see here how beautiful this cup is. Now, this is slightly higher than this point, but you can see the cup, this beautiful handle here, breaking out, pulling away. I mean, this is just beautiful. I mean, this is chart porn for people like me. It's just so beautiful, just beautifully bullish, just incredibly bullish. Now, here's the monthly. Even if you look at the monthly, this is, yeah, a tiny bit higher than this. But the point of using the closing lines is, you know, decades from now, when we're looking at historical charts, they will use, you know, closing prices, weekly and monthly closing prices, and you'll be able to see the beautiful cup and handle formation. It'll even be that much more obvious when we're looking through the rearview mirror. So regardless of what chart you look at, it's just a beautiful cup and handle breakout for gold and the gold stocks. Now, so going back to the weekly, so again, close at 2185. So there's measured upside targets of 2350 and 2500. I mean, this, you have this cup and handle, this right here, this cup and handle projects to 2500. And then you have this here, which projects to 2350. So moving on, yeah, let's just talk about history. And I did a video on this, I think in November. And this should really be a separate video talking about where does this breakout in gold fit in historically. So if we're looking at the most important capital markets historically, I mean, if we step back, okay, we have bonds, we have stocks, and then we have commodities. So bonds act differently. So if we're just looking at the interplay between stocks and commodities, it's really stocks and gold because gold is the leader of the commodity sector. So looking at historical breakouts here, that's what these vertical lines indicate. You know, you had this cup and handle for the S&P 1950, just incredible breakout. I mean, incredible move after the breakout where, I mean, at this 7 or 8 years, I mean, really the strongest ever. You only had this little blip in here. And then, you know, you look at the Dow, it was a 16-year breakout. I mean, this is, we're fudging things a bit here because it did have this little move here in 1980, but, you know, nevertheless, you know, 82 from the peak at the end of 68, that's 13 years. And then, of course, 2013. Now, looking at gold, this was artificial, but yes, it counts. I mean, it was artificial. Gold, like a beach ball being held underwater, just exploded. That, and then, of course, you have this week. And again, the breakout from the cup and handle formation. I mean, some other breakouts we can think about. Oil in 2004, 2005, breaking above 40, that's one. But again, I have to look at more things, and that'll be a separate video. But in the context of history, this is a very significant breakout. And that's just talking about history and capital markets, not even gold by itself. So that is something it's really important to understand that in the historical context. Now, moving on to the here and now. So these are the daily bar charts, gold here, silver here. So gold has gone straight up in the last 6 days. You know, it touched 2,200 today. If you look at this little consolidation here, this measures up to about 2,200 or so. This type of vertical move. So look for some kind of pullback next week. I mean, you could, you know, either you get a sharp pullback where it's a very quick retracement, where it could retrace, you know, 50% or 38% quickly. I mean, you could also see a small pullback where it kind of, you know, maybe it flags for a little while, a couple weeks or a month, you get some kind of triangle consolidation or flag. That's possible. But again, 2185, the first upside target, measured upside target, is 2350. Looking at silver, so silver stopped here right about 24.5. I did not touch these. I did not touch any of these lines from last week's video. So we noted it in last week's video, 2450 resistance here. Then you have 26 and of course 28 or thereabouts, a little bit higher. So we'll have to watch how silver acts here. Maybe it will consolidate or correct like gold and then push higher. But I tend to think silver's leading this move. Obviously, silver had their breakout, 2185, so 2350, that upside target. If it gets to 2350, you would think silver at least should get to 26 and test this level, which on a monthly basis, that's really significant resistance. Now, also, in 3 weeks, we have the end of the quarter. So, and I think quarterly resistance is, I want to say 24.5 or 24 or something like that. So, again, the monthly resistance at 26, but also you have quarterly resistance at the end of this month at 24 or 25.5. So, those are the levels to watch over the coming weeks. But I just, in general, I do think gold will pull silver higher, and I would lean towards gold going to 2350. That's going to pull silver up to 26, and maybe gold getting up to 2500. That can pull silver up to 28 or 9. That's just an initial thought at this point. I mean, if gold will continue to lead. So, and this is something I'm going to look at, in more detail over the weekend, and maybe I'll do a video on it next week with respect to silver leading. When does it lead after gold breakouts? So, yeah, it's something to look ahead to. But I think the resistance from 26 to 28 in silver, that will factor in considerably to its potential outperformance against gold moving forward. So wrapping things up here, looking at the miners. So they bounce, the GDX bounces from the support quite a few times, moved above the 200-day, kind of vertical move. It's overbought, but the next significant resistance is just here above 32, call it 3250. So there is some more room to move there. Same for GDXJ, where the next resistance comes in nearly at 40, and you had the nice rebound of support here. Very strong rebound. Looking at SILJ and the silver juniors, I mean, one here, you don't tend to see a lot of triple bottoms. I mean, this in itself is if we're backing out, this is a double bottom where you have 1, 2, and then maybe you could say it's a huge double bottom where this is the first double bottom and then this is the second double bottom. So like we saw with gold and the cup and handles, I mean, you can have larger patterns and you can have the same pattern within those larger patterns. So wrapping things up, you never want to buy into a really strong move like this. You definitely want to wait a couple days for a pullback, but you have to be careful because gold has broken out to a new all-time high. So we have not seen this in a really long time in this sector. And so the way that the sector and the miners are going to act, that they're going to act differently moving forward. So things can get overbought, and maybe they'll just correct very quickly and remain overbought. So you have to be careful about, at this point, waiting for some huge pullback that's not likely to occur. That's all for this video. Thank you so much for tuning in. Let me know what you think. Leave a comment. Check out my premium service at TheDailyGold.com/premium. Also, I'm going to have a great interview that I did today. That will be posted later tonight or maybe tomorrow. That's all for this video. Thank you so much for tuning in. Talk to you guys again in the next video.